to today's market commentary for the 8th of August 2019. Hope everyone's having a fun week and enjoying the volatility out there. Volatility is what traders like, although sometimes volatility can get a little excessive and make trading all too hard. So hopefully everyone's adjusting to the broader ranges, especially in the equity markets. So Wednesday saw some pretty dramatic swings in US equities, eventually leading to a 600-point rally off the lows for the Dow Jones. Ended up closing pretty much flat on the day, and the S&P and Nasdaq just a fraction higher. Some really quite incredible moves there, almost without any great catalyst. Thursday would be a little bit more one direction as bond yields stabilized. For crypto, yeah, it was a pretty quiet day, slow drift lower. Bitcoin drifted down to 11,600 and ETH to around 218. Not too much to report other than the typical headwinds, maybe just a step too far now for crypto to make any further highs. I've highlighted the 237 level in ETH a couple of times, and also the price action above 12,000 in Bitcoin, where we've spiked above and backed off very, very quickly. Also, if there was some safe haven buying of crypto over the past week, given things have turned around a little bit in the equity markets, we may be seeing some profit taking on the crypto front. So generally quiet, but struggling to make some gains. For FX, it was a fairly choppy day, although I have to say somewhat directionless. Dollar yen ended mid-range around 106.10, having traded probably only 20 points either side of that. Euro actually ended at the lows around 111.80, having failed once again to make any headway above 112.30, 112.40 window. Aussie, Kiwi, and Canada were probably the most main beneficiaries of the turnaround in stocks, with Aussie rallying back to 68 cents, although it was unable to get past the previous major support level, now turned resistance level at 68.32. We will touch on that momentarily in the technical piece. Sterling had one brief dip below 121, but snapped back to end of the day around 121.40. But the real story today was equity markets, and futures are pointed to a higher opening in the US on the back of some good gains in both Asia and Europe. And from the opening bell, it was pretty much one-way traffic into the close, which was obviously a very different experience than we've had in some of the days we've had recently with some real roller coaster rides. Today was not that. It was really straight line, straight up, and closing at the highs. It's amazing what a day of no trade-related tweets from President Trump can do for the stock market, although the one tweet he did make was about unwanted US dollar strength and his usual gripe at the Federal Reserve. This did provide a momentary spike lower in the dollar, which was very sharp, but also very fast. Didn't last very long. So what happened with equities? Well, the Dow Jones basically straight up, 374 points up at the close, up 1.44%, with the S&P and Nasdaq doing even better, closing up 1.8 and 2.2% respectively. The US 10-year yield managed to claw its way back to 1.72%, and gold chopped around either side of $1,500 level. With the rally in equities and yields, gold actually performed pretty well. Where we go from here is anyone's guess. The S&P is actually in positive territory for the week now, almost an impossible thought at one point yesterday morning in the US. So going to be an interesting Friday. But technically it can be tough during particularly volatile markets, because technicals also to go out the window, but they can be, certainly short-term technicals can be a little bit difficult to adhere to, because things are moving so quick and so far and so fast. So I just wanted to actually take a quick look at Aussie US today, although I will just retrospectively say the level I highlighted yesterday was that pivot level in gold at 1488, which actually held very well today. I think the low was around about 1490 and a half, something like that. So it did hold pretty well. But today, just going to look back at the Aussie really, and the chart I bring up here is a 2-hour chart, but really the level I'm just focused on is this 68.32 level. You can see here the low back in June, and then we had a few goes around here not so long ago, and then we dove through, and then ultimately the other day we made a move down to 66.78 before a fairly exhaustive rally back up to 68.21 as a high today. So my focus there is obviously this is a big pivot level. It's held a couple of times. When we broke through, it was pretty clean. We went up today. We stopped 10 points short, and as you can see, we backed off now to 67.96 at time of putting together. You can expect that level to be fairly pivotal. It's useful just at this moment just to think carefully about the Aussie though, because when you see some of these moves, the sharp move down here, was that really about the Aussie? No, it was about the Kiwi. When the Kiwi dropped after they cut rates by 50 basis points, the Aussie followed, as it often does. But it wasn't really an Aussie story, which probably explains why it was a bit short-lived. And then you've had these 2 days. You've had the big strong rally back in equities yesterday, and then obviously a rally today, which has drawn the Aussie higher. So, some interesting moves here, some Aussie related, but most of it pretty much not Aussie related, really reacting to global equities and also to the Kiwi. So, just worth keeping an eye on this line here. The market will be looking at it. I'm sure there will be sellers ahead of it, highlighted by where we made a high today. Probably fairly safe to say there will be some stops placed above it. Definitely worth keeping an eye on. Nice and simple, but sometimes the simple charts are the best. And with that, I'm going to say goodbye for the day. Hope everything went well. One more day to go in the world of FX, equities, bonds, etc. Let's see what Friday brings us. Talk to you tomorrow. Cheers.